But just to kick off, to give you and everybody an introduction to TT, some of you may know this information, some of you would have seen some of this information before. But I just, give you an update and an introduction into us as a company, and what we are looking to provide in terms of our client base getting access to trade China or the international products in China. And I'll make that distinction at this point. TT is not available to use onshore for trading onshore products. We are concentrating on allowing our existing clients to forge relationships with the mainland clearing brokers and with the exchanges, and to access a new set of products for them to trade. So if I may just start with a little bit of background about Trading Technologies. We are a technology company. We were founded in 1994 and have been developing trading software solutions, I will say, and exchange connectivity for 25 years. We started in Europe, but our head office was migrated to the US. But we're a global company with offices in Hong Kong, in Singapore, Sydney, Tokyo, and obviously in the US, and then across Europe and then into India. We do undertake all of our own development and we manage all of the systems ourselves. We don't outsource any of the work that we do to third parties. Currently, we specialize and we connect to 57 derivatives exchanges. We do offer other asset classes, but I would say they are a lesser part of our business. So we concentrate on the futures and options market listed derivatives. Our client base historically and remains today what we call majority of institutional and higher volume participants. That includes 200 or more names of those big global broker banks, general clearing members, direct clearing members, members of the exchanges, the agency brokers, the independent dealer brokers, and then a wide variety, a number of the institutional clients of those brokers and broker banks, which include the hedge funds, investment managers, corporate energy, and the commodity firms. And then historically, TT in the earlier days of our founding in the late 90s at floor close, TT still has a very large client base in what we call the proprietary trading firms, not necessarily the high frequency trading firms that you might naturally think of, but there are still a vast array of professional trading companies that are still trading futures markets today. And that's part of TT's client base. And then more recently, driven from Asia, I will say, is as TT is now providing a solution for, let's say, the non-professional investor, the higher end retail type customers that we now look to provide an offering for them. To put a point to the client base that we have, our current sort of monthly volume ranges from around 300 million to 500 million a month. So 500 million contracts a month that goes across the TT network and platform. And I'll explain a little bit more about that in a moment. Our core business is here, as I say, we are a technology provider and our core business is market connectivity, the trading screens or GUIs that accompany that, and that is in conjunction with algorithmic trading capabilities, APIs, order management systems, market data, data solutions, and now more recently we're actually offering co-location hosting and infrastructure hosting in the data centers that we have. But first and foremost, we are providing the market connectivity and the trading solutions for our customers to get to those exchange venues. This I just thought was interesting. There's a list of TT's current exchanges that we offer. Obviously, I've put INE there in the middle. The ones highlighted in yellow, I felt were, let's say, complementary international exchanges that might be complementary to trading Chinese international products. Obviously, those markets, other markets noted are where you have other major international commodity products, which I know everybody so far has talked about, obviously, the opportunities for people to explore those arbitrage or relative value type of trading strategies. So just a note there, these are the markets that TT have access to. So the TT platform, a little bit of background. So TT is 25 years. The original technology that TT designed, developed and put in place was the typical client-server architecture, where clients would have to implement their own infrastructures, their own connectivities to the exchanges, and manage all of those things themselves. 6 years ago, TT started on a route to design and develop a brand new platform from the ground up that was rewriting the code and everything from the beginning again to build a technology platform that can be used for the next 20 years. If you think that underlying technology that was there was 20 years old. And as of the middle of last year, we finally migrated 100% of our client base from that old technology platform that had been running for 20 years to the new TT platform. Therefore, all of TT's global client base is now on what we call the TT platform. So some information about the platform itself. It is a fully hosted, what we call software as a service trading solution with connectivity to those 50 exchanges. And obviously, as we've talked and we've heard, that there are nuances in respect to connecting to exchanges, whether it's directly by a vendor like TT or others, or if it's through the actual infrastructure of a broker. But our global infrastructure for that 57 markets is in place today. There is no need for any single client of TT, be it a broker, a clearing member, any other non-direct clearing member, direct member, trading participant, institutional client, or individual to have to implement a single piece of infrastructure or any application. And as a result of that, there's no need for them to actually maintain anything, have to update any software or support any software. Everything is fully managed by TT. It is delivered as this software as a service mechanism via the internet, ultimately via a browser. Now we can discuss sort of other technical ways of getting access if people have security concerns and want to have direct connectivity, but ultimately every part of the TT platform can be accessible through this software as a service delivery mechanism, and therefore no need to maintain or manage any part of the system technically yourselves. It is built on TT's own dedicated network, which we've implemented globally. We have acquired I guess the fastest viable commercially available lines that are circumnavigate the globe, and I will show you a map. That backbone network is interconnected between the different data centers and serves as our market connectivity layer to distribute the market data, but also allowing obviously the connections for our trading screens, the integration with the order management systems, API connectivity, and as we touched on, obviously the co-location hosting as well. In terms of trading functionality, TT has always been renowned for this sort of high performance, highly functional trading screen. And with that comes that sort of trading functionality. And I will touch on, I think we've heard from everyone in terms of arbitrage trading, and then I'll touch on some of the maybe nuances about how TT facilitates that as well. But again, we've heard as well, is TT also supports as a connectivity layer. We can be and are the underlying exchange connectivity for those brokers and broker banks. So with international markets, in a majority of cases, TT has its own dedicated connections to the exchange. We don't connect to, let's say, third-party infrastructures into the exchange. We manage those exchange connections directly ourselves. A key part of the software design is that the TT platform creates this ecosystem, and therefore supports a fully risk managed, what we call carry broker, but also simultaneously multi-broker market access. That is to say that every participant broker, so be it a mainland clearing broker, OSBP, OI, or international broker, can gain access to any exchange via the TT platform network, via any other broker that resides or has access to the TT platform. Therefore, we have buy-side clients who can have multiple routes connecting to multiple international exchanges, which can now include, obviously, Chinese exchanges through multiple different brokers. And simultaneously, we can have brokers who can utilize the market connectivity of their carry broker or other brokers who are providing that access on the TT platform and network. All TT services, so we talked about the screens, we talked about obviously the market access, but also the risk management system, order management system, other aspects of the platform are controlled by one single interface. So there's a TT administration system that controls all aspects of the TT platform. And again, as this software as a service delivery mechanism, there is no need, once a broker is onboarded to what I would call the TT ecosystem, there is no need to be reliant on the vendor or TT to have to implement or outline or add any additional infrastructure to the system, or rely on TT to configure the system for its use. The brokers have the ability to manage that in real time themselves. So once TT's configuration is made for a broker, they can enable their connection to an exchange literally in real time. And then that can be made available to their institutional clients or other brokers, again, in real time and immediately. And then from that TT network, our clients, the institutional clients of the brokers, make a point of connection to any one of TT's global data centers. They simply connect via either the internet, obviously using VPN, or a fixed line. So whether I'm based in South America, Australia, US, Europe, and I want to trade into the Chinese markets, I connect to my nearest TT data center. So just to touch a little bit more about the technology. So I say TT's business, core business technology is market access and the trading solutions. And obviously there are other components that come in respect to data analytics and other things as well. So our system is what we call a hybrid model, where anything that is, we call latency sensitive, pre-trade risk, order connections to the exchange, obviously real-time data distribution, order books, our algo engines and position management, those components and software processes are housed in our exchange co-location data centers. And then other aspects of our services that we offer, which we think of less sensitive, are held within, we use actually Amazon Web Services private cloud, and therefore we have the sort of scalability to store data on behalf of clients and allow them analytics around that data, but a much more scalable and cost-effective manner. And I will note, it does say on just this diagram that private line to co-location, but just to note that is incorrect, and that the desktop browser systems that clients can use connect both to the co-location and the cloud just via the internet. So again, touching on what we just noted, is TT manages in most cases our own direct connections to the exchanges. So we have our own physical lines to the exchanges. We have our own physical infrastructure in those exchange data centers, and the TT software enables or allows the broker to enable their own independent sort of session or connection to the exchange using TT software. And then our clients, who themselves can get access to the TT administration system, have the ability to enable their connections to multiple brokers simultaneously. Market data we typically distribute across our network. We are in most cases registered data distributors for exchanges, and we can provide that market data, obviously one to the brokers, but ultimately to any client that wants to connect into the TT network. So this is just a map of TT's backbone that exists today. And just to note that each of the diamonds are current data centers, and in those data centers is a full suite of TT's platform architecture that comprise of all those risk components, all the order connectors to the exchanges, all the algo engines reside in each of those data centers. I've noted Shanghai in red. As of today, TT does not have a data center in Shanghai, and I will explain why. But obviously, at this point, our solution is to deliver our international clients access into China. That's first and foremost in this sort of current plan. So each data center is redundant. So there are 2 points of connectivity for any customer. So if you see the route from South America down on the right, from Sao Paulo, that we have lines up to Chicago, but also up to New York. Therefore, should there be a single point of failure on one of those lines, our clients can continue trading. And that is the case, as you can see from this map, that for any data center, it has 2 points of connection to another data center. And so to that point that I noted that any client, again, Sydney, Sao Paulo, US, Europe, anywhere, if they wish to access Chinese exchanges, they make a local connection to their data center, Sydney, Sao Paulo, again, US or Europe. And they use our backbone and our network, which TT monitors and maintains, to get access through those routes and up into Shanghai. And I will cover, obviously, how we get connected to China. So admittedly, we've heard about CTP. One of the challenges that we found when we were building and looking to build our solution was that the physical connectivity to the brokers was not necessarily readily available or in place. And to explain, as we said, with the TT platform generally, TT has the connection to the exchange, and it is our software that just the brokers enable to run in their names. Our understanding that we come to know is that for access to the Chinese exchanges, that we have to run through the physical infrastructure of those of the brokers. And as our client base, as we said, is very broad, that not every international client of TT will have just one, either a single relationship, and they also want to use, they have multiple different broker relationships. So TT wanted to find a solution that was cost effective for both ourselves, admittedly, but also for the mainland clearing brokers and OIs, that they could get connected to the brokers of their choice to force those relationships, but in a cost effective manner, and in the same practice that there was no need for either of them to have to implement additional infrastructure. So rather than the TT route to CTP, TT worked with eSunny, that I'm sure you all know the name, as an alternative solution to those that have been provided via CTP. And for those reasons known, that eSunny has that connectivity to the existing, from outside of China into mainland China, but also to a majority of the mainland clearing brokers. So, my understanding that eSunny is connected to 140 of the 147 brokers who say connected. That is, those brokers currently use the eSunny mainland system. And obviously we're aware that there's the mainland system and there is the international system, and TT can connect to both. But in the case for the mainland clearing brokers, those that of you are running the eSunny version 9, we understand that obviously connects directly into the exchange, the same as CTP. the mainland version doesn't connect to CTP and then into the exchange. So TT makes a system connection to eSunny within Hong Kong that uses a route up into the Shushan data center, from where we understand obviously the brokers that we are currently working with have their eSunny infrastructure, and we just make a simple software connection through eSunny within the Shushin. So it remains that in most cases there are no need for the broker to have to implement any physical connectivity. There is no need for international brokers to have to implement any physical connectivity. The existing connectivity was there. We connect to eSunny, to the clearing broker, and into INE. So by the clearing broker supporting the TT, and I will say here lightly, the TT platform, what do we mean by supporting the TT platform? We are not asking the mainland clearing brokers to have to support the use of TT's trading screens and all other capabilities on the platform. In most instances, the client base that you have interest to, though the mainland clearing brokers have interest to serve, are already utilize our trading system, or may already utilize a trading system that is connected to TT. So we see that the requirement of the ask that we have of the mainland clearing brokers is enable yourself as a participant in TT's network. And by adding that connectivity, by connecting TT to your eSunny, you become part of the TT platform and that TT network. Therefore, you can, through the software, and this is just a simple software configuration, still provide your market access to INE, to any existing participant on the TT platform via carrier brokers. So we said you can serve OIs if you're a mainland clearing broker, you can serve OSBPs can serve OIs and other international brokers, or simultaneously you can serve directly the institutional clients who want to have that direct onshore relationship. So the software's configuration, I would say, is exactly the same in all cases. So we're not asking the mainland clearing brokers to support the TT platform in terms of distributing screens or distributing the use. We are asking you to join TT's network and market access to be able to, for you to offer that market access to what is existing clients of TT. The solution supports, obviously, the international products. As I said, currently TT is not available onshore to be used for trading onshore products. Therefore, our interest is to bring our client base and enable those clients to trade international products. We do support the open and closed directional hedge, arbitrage order types that's required, and obviously the use of the registered clearing account. So we have to support those functionalities. And then obviously, I'm not going to go into detail today about risk management. This is more of a high level overview, but because we are connecting through eSunny, you don't need to utilize TT's risk management system. The solution allows our international existing clients to continue to use the TT platform and the capabilities as they know and understand it. But ultimately, it allows mainland clearing brokers to continue to use eSunny if they want to risk manage TT flow, if I call it that, in their eSunny system. But TT does allow them to utilize the risk management capabilities should they see fit. And obviously that solution supports for the international clients all those standard things. The things that TT is also known for, synthetic orders, arbitrage trading. We've got algorithmic trading capabilities and our fixed APIs and other APIs as well. So just to touch on, again, and I think you've heard it all before, sort of some of the key sort of trading capabilities of the TT platform. So order types, there's the exchange order types, the limit, day orders, etc. but TT also support a wide array of synthetic orders that are held on TT's co-located servers. And they're obviously using our uncoalesced market data streams from the exchanges, to act as triggers. So TT has synthetic stops. For options, we have what we call an auto hedge or a delta hedge order type, and a variety of different synthetic orders that our users have access to trade with. Now, I say is, in terms of the mainland clearing brokers, that becomes obsolete yourselves. If you are providing market access, it has our clients that have the capabilities through their trading screens today to use those order types. And those order types obviously sit above or through the risk management system. So you are still enabling clients in terms of just market access. And you do have if there are concerns around clients using more algorithmic type of orders, there are controls within TT that do limit the order throughputs, aggressive and market type orders, not that market is supported on Chinese exchanges. So you still have the way to actually control those orders. So you're not providing clients access to use this functionality that exists today, but they have the ability to use that for trading Chinese exchanges. But again, we touched on arbitrage trading. So TT launched its spreading tool, Auto Spreader, back in, I think it was 2002 to 2004. So it's been around in terms of the core functionality for 20 years. As we said, 6 years ago, the logic in terms of the way that it works, the code was rewritten to enhance the speed and the capabilities of processing and trading these sort of like lower latency trading strategies. As we've heard from others, that it also supports multi-legged. There isn't a current restriction in terms of the number of trading legs you can implement into a strategy. But obviously for trading any arbitrage type strategies between international markets and those on INE, rubber, oil, copper, for example, then they're all available to trade. The solution works where it does allow the users to submit automated quotes into international markets, and obviously aware that there's quote restrictions. So the system will allow them to place their spread orders and therefore quotes into international markets. And if those are just filled, they automatically send the hedging order through to the Chinese exchanges. So there's no concerns of them actually hitting the restrictions of the 500 quotes per day on their Chinese trading accounts. We talked about automatic hedging. There are risk parameters built within the spreading tool that the individual clients can use. And then we touched just finally, the actual arbitrage tool is not running from the browser or a desktop application. In every instance, it is running from servers that are co-located in the different exchange data centers that TT are managing today. So just to touch through some basics of setting one up. So this was INE crude and CME crude, but it can be obviously Brent crude, and the same thing, it can be other products. Also to note, with these arbitrages, if the users want to be more specific, they can use a currency future. So I've added in just as an example for pricing or even hedging, that we can add in the Singapore exchanges, CNH or US dollar CNH contract or HKX. TT does actually support aggregation. So for clients who are more interested in the arbitrage strategy itself, there are international products that are listed on CME and ICE. So you have Brent crude on CME and Brent crude on ICE, or gas oil. So you've got these dual listed products. So TT supports an aggregation tool that allows traders to actually work the international leg in either market and still hedge into INE. simultaneously, if you're going to use the US dollar CNH contracts, you can aggregate those two markets, HKX and SGX. So you're always going to get the best price available. Configuration is just simple. You know, in the crude contract, it is simply one contract subtracting or selling, buying one leg and selling another, with that currency future on the right-hand side built in for price calculation. There are controls in here. We talked about active quoting, where the auto spreader will actually work one order on, let's say in this example, the CME leg, and as that gets filled, it automatically will send an order to trade on INE. So this was just a display. Just wanted to give you a visual show of display. You don't need to use this vertical display of prices, but just to briefly explain for those that this might appear relatively new, this is a vertical display of prices where in the middle column you have CME crude, which is 94 bid cents, $70.94 bid for 5 contracts, and above that it's five contracts offered at 95 cents. The same if we look to the right, priced in renminbi, is obviously INE crude. Now, if you look to the left-hand column, we have created this synthetic spread value between those two contracts. I use that US dollar CNH conversion, and in my instance here, I'm actually doing it in CNH. So I've got a renminbi price difference. If I change this over and I do a slightly different calculation, I just convert it and I'm looking at it in US dollars. So again, depending on the client and the client's preference, and again, this is just me using a straightforward US dollar to CNH conversion. But because of the different currency contracts that are available, depending on the arbitrage, so for example, if I want to trade rubber arbitrage and I'm based in Japan and I want to use Japanese yen, then I can obviously use a different currency conversion or cross rates, so I can price my value or price my spread in yen. So I have the functionality to do that. And just to note here actually, so TT creates this synthetic depth. So when we look at the bid and ask of the CME and the different volumes at different levels, and then if we look at the INE, and obviously we've synthetically created the depth here for INE, we will then work out based on the amount of volume available on each leg as to what the synthetic depth would be on those arbitrage trades. When entering orders, all orders are risk checked before they place any orders. So if you wanted to work 100 arbitrage trades, but you want to feed that into the market in smaller clip sizes, we do a risk check on the 100 lot order rather than the individual, let's say, child orders that represent part of that. So you can execute your order in smaller pieces, but we've risk checked that parent order, the large order quantity that you're looking to execute in total. This was just to show, again, just in this display, we place an order in the INE crude arb in renminbi. This is going to place an order in CME, which is looking at the price movements of that of INE crude. And as INE crude updates, we will automatically update the order that we have in CME to keep that relatively priced against the INE price, but relative to your arbitrage price. And as this order here on the INE placed at $70.90 is filled, we send an immediate hedging order into INE. So we could obviously talk about latency, and I will show you some statistics in respect to latency in a moment. Just wanted to note copper. INE, crude is just one contract. Obviously there's copper. So I'm using the LME copper here just to show you that obviously LME copper is 25 tons. I think if I'm correct, INE copper is in 5 tons. So there's a volume difference. So for every one I buy on LME, I need to execute 5 lots on INE. Now, if you were to want to price in the copper contract from CME, obviously we can do that as well. But CME contracts are based in, I think, cents per pound. So there is an additional conversion where I think it would be, typically it's like 11 contracts on CME to 2 contracts of CME. So we can work out the relative values between trading the CME contract and INE. And there we could combine, if there is a 3-way arbitrage between obviously China, London and New York in terms of copper, that can be configured, and again in the currency of choice. So this was just again to show this was the difference. This was copper, LME, INE copper, and then priced in renminbi, but the same thing, you can price in US dollars or any other currency of choice. Just to show the order management aspect in terms of TT. TT, like every other system, we have a standard order book to view, to view all of your order flow going through the system. And to note here, at the beginning, I was talking about the use of cloud. Every single order that is executed by a TT client or a user of TT is stored within the databases that TT house on behalf of our clients. And therefore, any user has access to historically retrieve or query any trade that they have done at any prior time from the point where they start using the TT system. So you can search a trade from 6 years ago, and that will be able to be found, and you will have the complete audit trail and audit history of that trade from 6 years ago. And we retain that data on behalf of clients until such time they discontinue using the platform, and then that data is purged. Also to note here, with our synthetic orders, we're the arbitrage orders, again, we are giving users the ability to see their trades as a synthetic order type. So in their order book, they will see they are working this crude arb, and then we will actually give them their fills. If you look at the third line down under those white lines, you see the fill there of the crude arb, and they get their arbitrage price, 18, and then the 2 individual legs. And then the bottom half, we're giving them a running P&L mark to market of that position with their arbitrage, but also of the individual legs that are comprised to make that spread strategy. This was just to go back to, we were talking about obviously performance, and so again, TT has these data centers, and within each of the data centers resides all of our infrastructure, and that includes, which is available and accessible for every user that has access to use the TT trading GUI, the Pro system, which is where our arbitrage tool is available. Any arbitrage order they may wish to work can utilize the co-location servers in any one of these data centers. So again, you know, TT would work or can work with clients to determine what would be the optimized location. But just to work on some basics, if I was trading copper arbitrage, I can work my orders at LME co-located in the exchange data center or in the CME Aurora data center. And those orders update from our price feed from INE, and then we'll automatically send orders back to INE once they're executed. If I want to trade rubber against SGX, or want to trade rubber arb against TOCOM, which is now JPX, I can work those orders from the co-location servers at the exchanges. So it doesn't matter if I'm again sitting in Sao Paulo, I'm not working those orders from Sao Paulo. Once I've placed my initial order, the order management component can work in any one of TT's data centers. One thing we're exploring currently, our connectivity is through from Hong Kong, is whether clients manage obviously the actual quoting mechanisms from Hong Kong. But as we've said, you can't do automated quoting on INE, on Chinese exchanges, because of the restrictions. So when we've done the analysis, there is no benefits of necessarily being close to INE for quoting, and therefore working those orders as close to the exchanges where they're first filled is more beneficial. And this was just to give you some statistics in terms of latency. So, TT always sort of stated that our previous system, Xtrader, was the fastest spreading tool available. And this is 20 years ago. And if you look at those statistics there, and then Xtrader Nirvana, which was sort of, I guess, available up until a couple of years or so ago, and the statistics there. And these values are in microseconds, not milliseconds. These values are in microseconds. And therefore, what we say in terms of hedge and requote is when we receive a price into TT to process that, make an adjustment and send an order back out, these is the microsecond turnaround times that TT has running on those auto spreader servers. So we get down to that third column, which is the widely available TT auto spreader engine, which everybody has access to use if they are trading arbitrage. So we're sort of like requoting latencies to adjust an order based on a price update, 56 microseconds. And we now offer, for those that are more interested in as much reduced latency as possible, is what we call a prime solution, where we have created a single software process that uses the order connectors to the exchange and the algo engine for auto spreader in a single software process. And we've got latency times down to, again, this is in test environments at 18 microseconds. So again, we look as a let's say available arbitrage tool to customers. TT still think that we have one of the most viable in terms of performance that is widely available. The system operates across this multi-broker, multi-carry broker access. So if you are a user and you are trading INE against CME or LME, you can trade through your Chinese clearing broker or through your OI or OSBP, but also through your broker if it's separate that you use for trading the international leg. And there is no degradation in performance because of the nature of the software design, and the division between the order routing to each broker is done at the software level. It's not done through separate components. So I say TT is sort of like, we look at it and go, based on our client base and their interest in using that today, that the interest to trade arbitrage into Chinese exchanges will continue to grow. And then one final point for those, again, as we touched on, TT offers a wider variety of capabilities and functionalities. We allow the tools, we have tools that clients use for trading international markets that doesn't require coding, but gives them a visual interface for them to build like an automated trading strategy. So if they want to create automated entry for their arbitrage, automated order amendment, automated deletion of those arbitrage orders, TT also offers them the capabilities to do that as well. And this was just to touch on one of the first points that I made was TT, this is about market access. The one thing I think that, if I may say, that INE, the mainland clearing brokers, that TT, we are trying to facilitate access to trade Chinese exchanges for the international trading community. And these are what I would say TT's main distribution partners that reside on the TT platform. And by having mainland clearing brokers join that platform or that network, you become one of those market access venues, and that our institutional clients can access the Chinese exchanges. This is not about you having to support TT screens. Our clients, say, can have and do have access to those screens. It's about providing a market access to the Chinese exchanges. And I like to think the solution that we've produced is one, a technical viable solution that you don't have to implement that physical infrastructure or physical components that exists already today. And I'm happy to talk, not today, but if anyone would like to talk in more detail, I think we've done that at a commercial viable manner as well, that it's not imposing upfront costs to actually join that network. So I like to think that if we can work more with INE and we can work with the mainland clearing brokers and our international clients listed here, that we can look to grow business as it gets access into China. So here's my email address. Really appreciate the time. Again, thanks to you, Ping, and everybody at INE today. Really do appreciate you extending the opportunity for us to talk about TT and our solution. Again, anyone watching and listening, please email me on the contact details there.